people don't even understand where the real value comes from. But before we get started, as always, we're going to go around, we're going to say our name, and then what do you think the value of this coin is in 15 seconds? Any coin, just in crypto in general. My name is Sim, like a SIM card or the Indonesian driver's license. I think the value of not just coins, but blockchain is that it completely removes people from the process and takes away as much corruption as possible, which is the human need for power. Wait, don't record it yet. Oh. Don't record it yet. No, actually, that's fine. That's fine. You can cut it. I don't want to have to cut it. It's more work.
So what's the question exactly?
The question is, what do you think is the value of it? Where do you think the value comes from?
So I think there is many, but if I have to just say one, it'd be like use a tool for people to then work.
Hey, my name is Sam. Yes. It helps like people to people pass out like we did. Sorry,
Hi, my name is Cynthia. I think the beauty of communication is that, same, it creates an open marketplace where we cut the fibers and all these websites that take margins. Yeah.
What's going on? Hi.
Sam.
What's your name and where do you think the value of crypto?
I'm Felicia Tedecki, and the value for me, I guess, in my version of it, I just think it's the future. So, yeah.
Thank you.
Robert Kent, the value is the blockchain, no? The integrity. Yeah.
Maze?
Hi, my name is Moira, and I'm new to crypto, so I'm not sure I can answer that question yet.
That's okay. Hopefully by the end of today you will be able to. And if you want to actually just pass it around, please hold it a little farther.
You don't want to do that?
Like that?
And I'd say.
It's comfortable.
My name is Bo, and I think giving people independent freedom of their finances.
I'm Nicole, and I guess the independent freedom. Just
I'm Jason, and I think the value of blockchain is programmatic access to financial systems for entrepreneurs of all sizes.
My name's Gary. I'm not sure I have enough information to answer this question, but I believe with the blockchain, there comes a certain amount of transparency for every transaction which cannot be deleted. It will stay there forever.
My name's Mark, and I would say demand.
My name is Danny. I like the idea of having a digital asset class that can theoretically be decoupled from the fiat big bank cabal thing that happens.
Hey, my name is Alec. I believe so the most important that will be give all of us opportunity to invest, not only the richest ones.
I'm Jonna, and I feel like I'm still answering this question, but I like what everyone has said.
I'm Stefano, and this is the new world of revenue streams.
I'm Sam, and I believe that it's just one of the biggest things that is going to sort of revolutionize how society moves forward, and I think it's pretty exciting to be a part of that. So,
Connor, I love the transparency of the blockchain and how it's ripping off the illusion of the whole money market in the world, and it's really showing them what's actually been going on for so long right in front of them.
Hey, my name's Dave. I sort of agree with everybody else, but I'll add that the composability if you're a software designer is amazing. You can just take and build so fast.
Thank you. So you're all wrong. I'm just kidding. I'm just kidding. No, that makes a lot of sense, right? Like we all have our own worldview, and we look at things from a perspective where certain things resonate with us. You know, and it was nice to see everybody kind of echo which piece really speaks to each person as far as what this process is creating and what blockchain is and what crypto is itself. So, you know, it's really easy to, again, I'm always the zoom out guy. It's really easy to be zoomed in on the smaller perspective and start to think about things from a place of, you know, how much money am I going to make on this thing? Should I get in? Should I get out? But then we're missing the bigger picture view of what's going on. So just, again, a little overview. If you guys have been here before, I'm really sorry for this broken record feeling, but value itself comes down to the idea of adding value to people's lives. That's all we're doing. We just care about adding value to each other's lives. It's all about quality of life in the end, actually. Anything that's done in the world is done for quality of life. And the idea of value always ties back to how much value does it add to a person's life. So the idea of money, how much value did money add to people's lives? We could go work, we could spend time and effort and energy doing something that we knew added value to society, and then we were able to store that amount of effort and energy and time in a place that was reliable so that we could then get that value back later on when we needed it, or our children need it, or anybody needs it. So money it was a great concept. And then it got turned on its head where the ones who controlled the money got all the power because they could control the production of money. Hi, hello. I knew you were going to come over in. Hi. What's your name and what do you think is the best thing about crypto? She's going to eat the mic. For sure. Yeah. That's Luna. She's on the blockchain. She's doing well. Back in the day, you know, kings controlled money. So it was coins, and they would break little pieces off of the coins. And then they would start like melting the coins and debasing the currencies by turning them into different coins. And over time, there would be no gold or silver left in the coin. And that would lead to the collapse of that kingdom because the trust that was in the coin would disappear. Then we turned it into paper 3,000 years ago in China. And then the Mongols came along and they were like, oh, why are you guys controlling how much money you print? If we can just print all the money, let me just print a bunch of money. They did, and that led to the collapse of another civilization that had been going for thousands of years. Then it happened every single time a paper-based currency has existed. Last time was like Weimar Republic, that was the big one, where they brought barrels of cash to try to buy bread. If you haven't looked up the photos, look it up, it's real. It's happening in Venezuela, it's happening in Brazil, it's happening across the world right now. But it's because we left the control who were supposed to control how much money was generated from how much people work, and only by adding value to society could you generate money. Those gatekeepers became corrupted because they're people, and they made up fantastical ways to actually generate infinite amounts of money using financial products. And those financial products, we haven't been able to participate in. We've been kept outside of it. You have to be an accredited investor and all this stuff to participate in that prosperity generation. That's why most people in the world weren't able to participate, and a few were. Somebody came along with blockchain and said, okay, how about this? I'll connect a bunch of computers together. I'll program those computers to have an accounting book on them. That accounting book is spread out across all these computers. And there's no one computer who is the main head computer that you can modify. The code is immutable. It's encrypted. And that means we can store value in a very specific way. We limit how much Bitcoin is produced. We limit how much is produced over time, and less gets produced over time. Great. Now we figured out a way to store value without humans. Now that is a very, very valuable thing. You know, as soon as you tell me I can store my value somewhere where no person is going to be able to steal it or print it out of thin air, or I can leave it to my kids knowing that one Bitcoin is going to get, like, you know, there's going to be a level where Bitcoin reaches where it'll buy a certain amount of things, and beyond that, it probably won't grow in value. But at that point, first of all, between here and then, it's going to grow in value. But by that point, I'll be able to leave it to somebody, knowing that nobody else is going to be able to print a bunch of Bitcoins and steal that value, like the US dollar's been. So that's valuable. That's what Bitcoin does. Bitcoin allows us to just store value in a very specific place. I'm like melting. Can you please close the, I don't know if you close the doors. So that's literally what Bitcoin does. That's why it's done 2 million% returns, because that use case right now is so valuable to people when they're printing 20, 30, 40% of the money supply, and then within 10 years, they're going to print 1,000% of the money supply. You know, we're expecting 10x the money supply to be there within 10 years, because that's just how currency inflations always go. Because you have to print more to keep the bubble up, and then stocks and assets and real estate goes up, and everybody thinks we're getting rich and we buy more, but you're not. They're just printing more dollars. Just because you have more dollars doesn't mean you have more value, right? And it'll probably keep going until about 2030, 2035 at the latest, and then the whole game's up. At that point, you literally can't print enough. At that point, you have to print like 1,000% a year, which means you've gone into hyperinflation, and this whole game will be up. So somebody smart, probably not some Japanese guy named Satoshi Nakamoto, but somebody who understands the markets and in my assumption, the powers that be, released this new technology that it doesn't fall prey to all of that. It allows us to be able to store value in a way that is immutable and incorruptible and all that. So that's what Bitcoin does. That's why we like Bitcoin. That's why we buy Bitcoin. Okay, now there's 10,000 other coins. Are there just a bunch of Bitcoins? Everybody thinks like, well, there's Bitcoin, there's Ethereum, which is another Bitcoin, there's Cardano, which is another Bitcoin. No. Somebody came along and said, okay, if this is just a bunch of computers that are connected together, which is blockchain or Bitcoin, that's just like the internet. I can program the internet to run websites. So why don't you let me program this computer network to do more than just have an accounting book that just keeps track of stuff? Why don't you let me program it to run apps on top? And that was the idea of Ethereum, which it's a programming language. It's basically a virtual machine that's programmed according to a programming language that allows you to build apps on top of it. So Bitcoin is like, call it digital gold, where I can store my value somewhere, and the only function it has is to store value in a reliable way. Ethereum is like the internet, where it's a bunch of computers connected together that I can program to do something. And then there's thousands of different apps that are built on top of Ethereum. Most of DeFi is built on top of Ethereum. Each one of those apps does something that adds value to society. So remember, everything is adding value to society, adding value to our lives. So when we're investing in things, when we're buying things, we have to remember that we're buying things that add value to society, right? That's step number one. If it doesn't add value to society, short term, you might make a bunch of money on Shiba Inu and Dogecoin and all these shit coins, we call them. But when you look at the fundamentals, like, these are meme coins, right? What do memes do for society other than mass psychosis? How much do you pay for memes? Zero. So long term, the value of meme coins is nothing unless they're morphed into something else. So when you're buying things, ask this question: what does it do? Like Luna. I love Luna. I've looked at Luna. I love Luna too. But looking at Luna, the way the tokenomics are set up, it's a stable coin that's backed by the value of the entire Luna network. And then it stays stable, and it's pegged to the Luna network. So there would have to be more monetary flow than the entire Luna network for it to not work properly. If you guys don't know what I'm talking about, that's okay. The Luna lovers, love you guys. Okay, thank you for introducing me to all that stuff. But the idea is, what does it do? Step number one in society. Okay, if it doesn't do anything, you're not going to stay in it long term. And again, I'm only a long-term investor, because another kind of zoomed out perspective is we are watching the third stage of the internet, Web 3.0. Web 1.0, just internet, email, connect people together, computers plugged in together, and they can talk. Web 2.0 became interactive. It still involved people. It was the Googles and the Amazons, where people are integral to the process, but it became bidirectional. I can interact with it. It can interact with me. It can mess with my elections. It can change the entire world psychology to believe that there's some boogeyman out there that we all need to inject ourselves with. Anyways, that was 2.0, right? 3.0 says we don't need humans. We don't need humans. Humans are the problem. Let's remove all the humans. Let's automate all the processes. Let's only get them involved in the endpoints, in very secured endpoints, and that's Web 3.0. And that's what crypto is. That's what blockchain is. This is the next stage of the internet. Now, if you were there for Web 1.0, today you'd be a billionaire. If you were there for Web 2.0, today you would be a billionaire. At least a millionaire. Like, you could have just put a few $100 in, and at some point you would have by mistake became a millionaire. I mean, if you got it after the dot-com bubble. If you got it before the dot-com bubble, you probably broke, right? Now this is Web 3.0. This is why $50 a Bitcoin in 2010 is worth like $300-something million today. For a guy who some kid just was playing video games and went, oh cool, somebody's mining some crap. And then kept playing video games, and he's made more money because he got to Web 3.0 by mistake early. That's what we're doing. When we're investing in things, we're investing in Web 3.0. These things are going to run the entire world. And when I say the entire world, I mean, you think internet took over the world? You think Web 2.0 took over the world? That was nothing. This is like every step you take, every breath you take, every penny you spend, every single thing you fucking do in the world will be on the blockchain. Okay? And I'm not saying that lightly. This isn't a joke. Every single thing that the world does will be connected to blockchain in some way and automated across the board. So we're investing in stuff where we go, if everything's going to be on there, why don't I just find some good projects that I can invest in? And then why don't I just understand this? So, we said Bitcoin is produced at a limited rate. There's something called a Bitcoin halving event, or halvening event, some people call it. If you don't know what that is, Google it. Google the Bitcoin halving. You must understand this process, at least for the next 4 to 8 years, because that's what's driving this bull run every 4 years. Bitcoin halves, May 2020, half the Bitcoin starts getting produced. Humans think it's rare. We drive up the prices. They drive up to a ridiculous valuation. Then we stop buying it. Then it crashes back down. In that process, a lot of money is generated and a lot of money is lost. So if you can understand that process, and then you can pick some projects that are good projects, high quality projects, and buy those and maybe get involved in them long term, it's a no-brainer that you will make money. But more importantly, you are part of the 1% of the world who are actually on this ship. 99% of the world is sitting in traditional assets and so amazed that they just made 25% on real estate. When in crypto, we make 25% between coffee and lunch. And between lunch and dinner, we lose 70%. And the next day, we make 200%, and you get the idea, right? So right now, we're in that loss part of this journey. So, right? So now, how do we value things? Oh, there I am. How do we value things? Okay. Big picture. How much value does it add to society? That's a simple one. If Bitcoin is digital gold, how much value? Nominally around $10 trillion. Can you make sure she doesn't eat the cables, please? She can't even eat the cables. She can try. Gold adds about $10 trillion of nominal value to society. Bitcoin's at about $1 trillion right now. So comfortably, I could say Bitcoin should get up to $10 trillion of value. Eventually. I don't know when, but eventually. Within the next 10 years is really likely. Now, Bitcoin does what gold does better. I can move it across the world. I can put $1 trillion in my pocket. I can immutably send it to the middle of Africa without having to ask anybody, any single person a question. All those things you can't do with gold. So it does the gold job better. But let's just say, just going from basic, how much value does it add to society? Gold adds $10 trillion of value to society. Therefore, Bitcoin should get up to $10 trillion. So a 10x from here, minimum. Ethereum is like the internet. It's like a new way of doing the internet. How much value does internet add to society? like over 100 trillion, probably over like at least 50 trillion. But like if you add up everything that's on the internet, I'd put it at about 100 trillion. Okay, so where's Ethereum at? A couple hundred billion? I mean, I'm not going to say Ethereum is going to take over everything, but that's the ceiling that I would put it at. Many, many trillions, many tens and dozens of trillions is where I would put Ethereum ceiling. So now think about that. Wait. Trillion, at least, it'll probably go farther, but we can say that it's most likely to go from a trillion to 10 trillion. That's 10x. Ethereum is likely to go from like 300 billion to, I don't know, 30 trillion, which is 100x. Right? And this is where the difference comes in, where if you understand the technologies, if you understand the value proposition, if you understand where the value is coming from, you can then gauge what kind of a return you're supposed to get. And in this journey, that gives you some solace knowing like, okay, it's okay. Just because it went up 21 day, 30 the next day, it went down to 30 the next day, doesn't mean I don't know that it has this innate value inside of it. Now, all the other coins, let's say my favorite, XRP, I'll say it, okay? XRP solves the use case of allowing value to move across the world in 3 seconds from any point to any point. Now, that is worth about $400 trillion per year. I'm not saying that it's going to do all that, but that's a good number, you know. And it's in the, again, in the double-digit billions, and it's going to go up to trillions and trillions and trillions. And then there's 10,000 other cryptos. Each one of them services a certain use case. Figure out what the use case is and what the world already pays for that use case, and then you can have a bit of a calculation of like where you're expecting it to go. Now, 90-something% of these projects will not make it. Statistically speaking, 90% of startups fail. And out of the 10% that succeed, 90% are started by people who already had successful startups. That's a fact in the world for every company that's ever started. Only about 1% of the startups are made by new people. And even out of all those startups that survive, within 5 years, many of them are dead. Within 15 years, most of them are dead. So the likelihood of us calling things now that are going to be the IBMs and Microsofts and all this stuff is not that high. So take everything with a grain of salt. Just because somebody comes along and says, we're revolutionizing payments and we're doing all of this stuff, the decentralized blah, 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 AI, blah, 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 and you just hear these things, doesn't mean that they're going to come to fruition. So step number one, how much value does it add to society? What does it do? How much value does it add to society? Okay, now let's look at the details of how we actually go into looking at tokenomics for different things, right? For now, yeah, let's go to CoinMarketCap and pull up Bitcoin.
Would you agree there's only about 20, maybe 30 coins that actually bring value for everything right now, like properly working, like
Actually doing the job that they said they're going to do?
and in real life?
Yeah, probably even less. That are actually doing what they say they're doing.
Maybe 20?
I don't even know. Yeah, the number is in the double digits somewhere. That they say they say they're going to do something. Or at least they've built the partnerships and they have people on board who are already implementing it in their systems in beta.
I mean, actually, in real life, like things like VeChain, like XRP.
VeChain's not doing much. I mean, okay, fine.
But it's actually working.
It is actually working. Technically speaking.
Just no one knows about
Yeah, no, you're right. Right. Technically speaking, if they're working, doing what they do, no, then there's hundreds. Then there's hundreds, because there's hundreds of DeFi protocols that are actually doing what they say they're going to do, actually giving you the returns, they're actually allowing staking.
One chain and one chain, like it's in real life and on the blockchain.
Adding real life value, yeah, there's not very many. But there are some that are actually doing it. Like, for example, Bitcoin. Bitcoin is doing what it said it's going to do. I'm going to let you store value, immutable way, nobody can hack it, nobody can take it. $1 trillion is sitting there for 10 years. Hackers have been trying to hack it. Governments have been trying to shut it down or whatever, which they technically haven't. They've actually allowed it to smoothly, right, get through all the regulatory loopholes and kind of keep it outside of the purview, which lends me to believe that they're the ones who released it in the first place. But it's doing what they said it's going to do. So, okay, so how much value does it add to society? What does it do? How valuable is that use case to society? Next, how much is there? How many of the actual assets exist? Like, you know, there's whatever, I don't know how many, but let's say there's 20 Picassos. Okay, and Picasso is not making them anymore. Hopefully. So that's why they sold for 20 million, and then 50 million, and then 100 million, and then 110 million, because there's limited number of Picasso. And the scarcity of it creates value. So this is why Bitcoin's at 42 grand, because there's only going to be 21 million ever, but 18.8 million have existed, have been minted or created up until now. So it's rare. 51 million millionaires in the world, but only 21 million Bitcoin will ever exist. That means if each millionaire even wanted to pay all of their net worth to buy one, they couldn't. So then just think about that. You add the billionaires, you add people like us who actually want to get in there. Then the amount of supply compared to how much demand there is already, with just 1% of the population even looking towards this direction, and even out of that 1%, a small percentage actually holding Bitcoin, the price has to go to ridiculous valuations eventually. And then you're telling me the currency supply is going to be inflated 10 times? That instead of $150 trillion, we're going to have 12 quadrillion or $1.2 quadrillion by about 10 years? Then these numbers just have to go ballistic. You know, and it's difficult to think like $1 million Bitcoin? What? Okay, it's 1 million rupiah. How do you want it now? I'm sure you would jump for joy if it was 1 million rupiah. It's 1 billion rupiah. You don't even flinch. 1 billion rupiah, that's still cheap, right? Okay, now it's $1 million. I just changed the symbol on the front. Same paper money, same fake Ponzi scheme money that we're talking about, monopoly money that we're talking about. So it mathematically, again, my opinion is, and my analysis is, mathematically it has to get to $1 million. By 2030, if it's not above $1 million, I will be very, very surprised. Because it's rare. And now, also, you have to look at the issuance of it. That's kind of the third point we look at, the issuance, which means how is it released? How is it created? The beautiful thing about Bitcoin is it's mined, so 900 are mined today. The computer network that's running, it's running a calculation, 900 will be created today. I can reliably say that. 900 will be created tomorrow. And this process will repeat until 2024, at which point, when the Bitcoin halving happens, 450 will start to get produced every day. So it's issued at a very reliable rate. I don't care how much demand goes up. It's issued at a reliable rate. And then there comes a time when the issuance gets cut in half. That's way better than gold. Gold, it's issued at semi-reliable rate. It's pretty difficult to find gold. But as soon as the price of gold goes up, investment into miners goes up. The miners invest into mines and more efficient equipment, and they mine more gold. SpaceX is planning on pulling an asteroid out of the sky that has about $1 trillion of precious metals on it. When that happens, gold is going to be worth about a zero. Gold is one of the most abundant metals on the earth. If you just got to go deep enough, and there's so much gold that we could cover the whole earth in it. It's hard for us to find in the little thin shell that we can get into. But the point is, the gold supply is flexible. Bitcoin supply goes down infinitely at a reliable rate. So when demand is going up and supply constantly keeps going down, guess what happens to price? Price is the only variable in that can flex, and price goes up reliably. Now it does go through ebbs and flows. Halving happens, price spikes. You know, the demand dries up at that price drops. 4 years later, halving happens again, price spikes again. But the issuance of Bitcoin is very reliable. It was fairly issued, where it was mined right from the beginning. That's really good. Some of the coins are issued like XRP, where they pre-mine all of it. They pre-mine all of it, and then they put it somewhere. Okay, they put a ton of it in the treasury that's going to be released at a set rate. They give a bunch to the creators. They gave a bunch to investors who got in early before everybody else could get it. So if you're really looking at the depths of how to value something, how is it issued? Because if I just issued it and I put Like Dogecoin, I put a ton of it in one guy's pocket, and you're going to put your money in it. If that one guy sells, you're going to lose a lot of value. So that's not very safe. Bitcoin, super safe. There's no one person who holds most of the supply. It's issued at a reliable rate, and the world wants it. The supply is going up. So can you put that back up again? Please. So how much exists, and what's the max supply? Right? Some coins don't have a max supply, which means it's like the dollar. They can infinitely inflate the amount of it, or at least look at if it is it inflationary or deflationary. Like Ethereum doesn't have a limit, and it was inflationary because more and more was produced over time. But now they've come up with a new protocol, the EIP 1559 protocol, which burns the amount of Ethereum that is taken from fees, or some capacity of Ethereum that's taken from fees. Overall, that's made it deflationary. The more people that use it, the more fees are generated, and more of it gets burnt compared to how much is actually created, which means the supply of Ethereum is deflationary. So again, think about that. Issuance is inflationary, is it deflationary? Who's holding most of it? And you can search up all these stats by just going in and searching the issuance of a coin. Sorry, whose is this? Mind if I have some, please? Sure. Thank you. Cool. What does it do? How much value does it add to society? How much exists? And is it inflationary or deflationary? If less of it exists and it's deflationary and adds a lot of value to society, you're already in the direction of thinking like, this is a good asset. Fantastic. You can also go on to ICO drops or Masari to check the issuance of coins, the allocation of coins, so you can have an idea of the statistics for it. ICO drops or Masari. ICO drops or Masari.
Masari?
Yeah, Masari. MESARRI. And we already talked about distribution. Who's holding it? You know, if one whale's holding it, most of it, then it's dangerous. You're playing with fire because that whale could do whatever they want with the price and the currency. They could actually dump it, wipe out all the liquidity off of it, and leave you holding the bags, which happens all the time. Because remember, most cryptocurrencies are scams. Yeah, exactly. Most cryptocurrencies are scams. Out of 10,000, most of them are invented to steal your money. They're either literally invented to steal your money, or they're ideas, but they're not going to come to fruition. So in the end, they're going to basically waste your money, like EOS. Okay. If it's pre-mined, what is the vesting schedule? Which means, how will it be released? We just kind of talked about that. How is it released? Is it planned to be released at a very reliable rate over a long period of time in a smooth way so that the project has time to grow and it's going to, you know, somebody can't just, it's not like at that point, you're going to see a massive drop in the value of it and problems could show up. But how is it released? Now, sorry, going back to the Bitcoin, this is not how valuable it is. This has nothing to do with how valuable it is. This is the single least reliable number that you can use to value something. How many dollars it is has nothing to do with how much a cryptocurrency is actually, how valuable it actually is. Remember, dollars are worthless. They grow on trees. They're literally trees. It's paper and linen. Those are plants. They're about as valuable as plants. I mean, plants are the most valuable things we have in society and life. But dollars are worthless. They're being printed at 30% per year. They're going to be printed at 1,000% per year at some point. So how many worthless things it is about as worthless as the dollars themselves. Stop trying to worry about how many dollars something is and how many dollars you have. You can have all the dollars in the world. In 10 years, you will have less than 10% of the value in the world. Okay, that's just how how fiat currency systems work. If you don't know how that works, I'm sorry to break your reality. I don't care how many dollars you have sitting in a bank account, somebody's taking them. They just took 30% last year and they took 30% this year, so 60% of your dollars are gone. You'll realize it in about 5 years. How many dollars it is does not make any difference. Because imagine if there's one Bitcoin. Instead of 21 million, there's like Picasso's, there's 20 Bitcoins. And the world thinks the total value of it is 800 million. Then the price of, or 800 billion, the price of each Bitcoin is going to be many, many billions. It's just because there's less that this number goes up. You know, you probably see Cardano and you're like, Cardano's $2 and Bitcoin's $42,000. That means Bitcoin is that much more valuable than Cardano. No, it's not. Like, fundamentally speaking, Cardano will probably outvalue Bitcoin at some point. If they hit the nail on the head and they actually do what they're going to say, it'll go well beyond Bitcoin. Like Ethereum is so much more valuable than Bitcoin. People just haven't woken up to that reality yet. Bitcoin does one thing: keep track of how much you got, how much you got, how much you got. That's about worth $10 trillion to us. Ethereum lets you build apps, which is the internet, which is way more valuable than just gold letting us keep track. And the reason is because more Ethereum exists. So this is simply a calculation of this divided by this. And what is this? That is the market cap, the hypothetical value of the project. It's not how much money is in there. That does not mean people put $792 billion into Bitcoin. There isn't $792 billion of Bitcoin sitting in there. There's about $400 billion of actual cash value that went into it. This is the value of those 18 million on the Bitcoins if they were all sold today. But that fundamentally can't happen because as soon as you start selling them, the price goes down. So therefore, if they were all sold today at this price, magically, then the value would be this. That's the hypothetical value that society gives it. That's the speculative value that society gives it. So this number is just the speculative hypothetical value that society gives it divided by this, which is the real number. It's an actual number, right? This number is a speculative hypothetical value of each coin if all of them were sold today. It has nothing to do with how valuable something is. The more important one is this and this. How much value does society think it has, and how many of them exist? Less of them that exist, you want it. Higher the value compared to less of them that exist, you want it. It's a good idea. So then you have to start looking at those things. As always in the world, what they show you is the facade. What you have to look at is what's behind the curtain and understand that. And this is why most people fail in cryptocurrency, because they don't even know what they're buying, how much value it adds, what the use case is, what is it going to do, how many exist, what the hell does this market cap thing mean, right? And this is also the hypothetical value of these coins that exist already. This fully diluted is the hypothetical value of all the coins that would ever exist at today's price. So build a mental model around these things. And now a lot of people think it doesn't have value. Bitcoin doesn't have value. Because what is it? Where is it? I like tangible things, like dead trees that I can put into my pocket. You know, we come from that world where we worked for dead trees. They convinced us, spend time away from your family, away from your loved ones, let your kids grow without you, so we can put some dead trees into your pocket. Seriously. And the richest people in the world were like, these idiots work for dead trees. Make some more dead trees, bro. Kill some more trees. Let's give them some. Actually, forget about the trees. Let's just put a number on a screen. Skip the tree. That costs us too much money. Let's put a number on a screen and get these fools to go work for a number on a screen. And you know what I'm going to do? Watch this. It's the smartest trick ever. I'm going to go create a financial product which mints numbers on a screen. It's like gambling where the house always wins. And I'm the house. Watch this. Derivatives, bonds, ETNs and ETFs and abbreviations these fools will never understand. And I won't let them into the door unless they're accredited. And they'll have to give me their money at the door. And I'll get to go put it wherever I want. And I'll only put it in stuff where I make most of the money. So here's how I make my money. That's what I did. I went, click, and I just put your money somewhere where I make most of my money. Well, the rest of us were convinced to work our asses off and break our backs and die for numbers on a screen. And when you run this analysis on the US dollar or any of them, it doesn't have a cap. Infinite amount can exist. Issuance is just whenever Biden feels like issuing some, he just clicks go, issues a bunch of treasuries, sends an IOU to the banks take the IOU to the Federal Reserve, and voila, a bunch of coins just popped into existence, adding zero value to society. Then it's given to the banks, and the banks take it, and somebody wants a loan, and click, voila, more coins popped into existence, adding zero value to actual society. Sorry, what were we talking about before this? I'm very passionate about. So, right, so that's a Ponzi. And where does the value of Bitcoin come from? How come people are saying this thing's valuable? Because that whole Ponzi scheme that we've been convinced is the world isn't applicable to Bitcoin. There is no Federal Reserve. There is no printing it. There is no more to create. No more will ever exist. That's step number one. Second thing is, okay, how did we value things in the traditional world before 2000, before the year 2000? The value that something adds to society was how many goods did you produce and how many services did you produce as a person? How many shoes did you make? I'll pay you that much money for the shoes. How many massages did you do? That's how much money I'll pay you for the massages, according to how valuable those things are to the people who make them. How many cars did Ford produce? That's the value of Ford. Less cars, less value. How many banking services did some banking company produce? That's the value that we value them at. Simple. And even all of that was hidden behind the company's own reporting, so they could kind of fudge the numbers, and there's no way for us to check what the value of the thing is. Around the year 2000, a beautiful thing called the internet came along and said, we're changing the way that we look at the value of certain things. The value of Google isn't how many search results it produces. It actually doesn't produce any websites, except for like one called google.com. I guess Gmail counts too. You get the idea. It doesn't produce websites. It doesn't produce search results. What it produces is value to people's lives by bringing them knowledge. And the world was like, that is one of the most valuable things I've ever seen. And when I will give you my attention, which is the single most valuable commodity on the planet. Billionaires can't buy more of it. Trillionaires can't buy more of it. And we said, we will give you our time, and you can convert that into money because you're adding so much value to our lives. Uber came along and was like, I'm not going to own any taxis. I'm not going to produce anything. I figured out a way to add value to people's lives. It's just a bunch of computers connected together, owns nothing, and it actually is the biggest taxi company in the world without owning a single taxi. Airbnb is the biggest hotel company in the world without owning a single piece of real estate. So where are their values coming from? They're just computers connected together with one website and one app. How come they're worth billions of dollars? It's because they figured out a way to add value to people's lives without following that traditional model of like, give me something physical and do something in the real world. It's what the world is willing to pay for that gives the value. That's where Bitcoin's value comes from. Same as all those companies, it's a computer network that's connected together that adds value to people's lives by allowing them to store their value in a place where they can reliably store it without it being stolen from their children. You know how valuable that is to people? It's so valuable, we're paying $1 trillion for it already, and it's going to probably 10x from here. So the value of these coins and cryptocurrencies and all these things come from how much value those things add to society and literally how many coins exist. Now, what does that coin do? What's with the damn coins? Why is it a coin? You know, coins do stuff. You remember you used to play in the arcade, you pop in a coin, you get to play some stuff? Or coins were what kings used to be able to run their kingdoms. What that coin does, you're not You're not just buying a magical hypothetical money-making machine. When you buy a Bitcoin, what it allows you to do is it allows you to pay for the computer network. Because, you know, the Bitcoin miners, let's say we're all Bitcoin miners, we're running a computer at our house. This is how Bitcoin works, or blockchain in general works. Somebody's running a computer at their house. They paid for the computer, they're paying for the electricity, they're paying for their time, they're paying for the cooling if it's in a hot place. They're paying for stuff with what we call, you know, there's no Google paying for it. There's no nothing paying for it. So when I want to use their computer to make a transaction and send it somewhere, I pay them a little fee. And the way I pay them that fee is with this coin called the Bitcoin. So what you're buying is usage rights to a network. And the more valuable the network, the more expensive the usage rights, and that's what these coins are. And that's why understanding their value is so important. Because you're buying these coins, which are usage rights to a computer network, you better know how valuable the computer network is. You better know how many coins exist. If you don't, some other guy does, and he's going to take all your money. And you're going to lose most of your money. That's a fundamental fact of society. Because even in this world, even in crypto, there's a guy who wakes up and does this. And here's how he takes your money. And he just stole your kid's future. Not stole it, this is a game of money, I'm sorry. If you come play a game with people who know how to play it way better than you and you lose all of your money, that is on you. You came to play a game that you don't understand. And we'll talk about futures and derivatives and the manipulation, all that stuff in a different context, but that's what's going on here. So make sure you understand all of these things about something when you buy it. Now there's a few more points that you have to understand deeply, and these ones get really complicated. So now let's meter, like electricity meter, .io. Yeah, it's a new coin that was presented that I've never seen before. So we're going to run this full analysis on this coin and see if it's valuable or not. I wanted a novel use case so that I go through the journey with you guys. Yeah. So, you know, a friend went, have you heard about Meter? We're like, no. He's like, here's the website. So here's what I would do if when somebody says invest in this, we go, okay, thank you. Number one, I'm not going to invest in that right now because you told me to, because I don't know what it is, and that's how I would lose my money. Well, let me go do some research on it. So, no, that's good. That's good. So Meter, when you watch the video, is a very smart idea. It says, what stablecoins are they're cryptos that are pegged to the price of an asset. The US dollar stablecoins are pegged to the US dollar. The Terra stablecoin is pegged to Luna. The PAXG stablecoin is pegged to gold. There's something backing it, something physical, something valuable backing it. So a coin gets created on it, and they're very useful for many different use cases. This is a coin that's pegged to electricity. They figured out a way to peg it to electricity. That's useful. Because electricity, think about electricity. Like, if I have X amount of electricity, right? If I had it in 1903, it produced a certain amount of value for society. Then motors became more efficient, systems became more efficient, computers came along, and that same amount of electricity would add more value to society. So now that electricity is more valuable. So then the trajectory of how much value it'll be able to add to society, electricity, a certain amount of electricity, to me, will keep going up. As soon as quantum computers and things come into our pockets, yeah, electricity will become more and more valuable over time. So the value proposition of something being pegged to the value of electricity tells me that its value will grow over that. And we're talking about value. We're not talking about dollar-denominated numbers. Those numbers will go up anyway. They're just going to be printing 1,000, you know, whatever 1,000% of the money supply. So the numbers will always go up. But the value that it provides to society will go up. Genius. The use case, genius. It checks off the first box in a very beautiful way, and I was like, wow, this is great. Great idea. Okay, that's step number one. If we scroll down, we'll kind of bounce around a little bit. No, just scroll down, yeah. backed by. Partners. This is the one of the, I guess, eighth most important, not the eighth most important thing, but on the checklist of things that you need to write down to look into. We have to ask, yeah, I just finished meditating, sorry. Oh, let it go. Partnerships, because you can have all the ideas in the world you want. You don't have the right people partnered with you, you're not going to get there. If you want to change banking and you don't have banks on your side, you're not going to change banking because you're not the banks. But this tells me, okay, it already has great partners. You research each one of these guys, you realize they're some of the top investment firms in cryptocurrency and in the world, actually. So they're already backing these guys because they see the value proposition. And these partners don't just bring money, they bring networks. And those networks allow doors to open and things to happen which wouldn't happen unless they had the partners. So, okay, it has a great value proposition, it has good partners. I wouldn't say the greatest partners, but great partners, relatively speaking. Amazing. Can we please scroll down a little bit? Yeah, everybody always says this. Highly decentralized, fast and scalable, interconnect. It's almost like they got to fill the boxes. So everybody's always saying stuff. So any place that says that, because all it means is we're blockchain, right? Ooh. Those were investing partners. These are actually, apparently they have Chad. Chad is partnered with them. Oh, if you don't know Chad. Chad is very popular in crypto. Just kidding. It's just that meme is like called the crypto Chad. It's like I would be considered a crypto Chad, where it's just people who they're all about crypto and they're always talking about crypto. But sorry, I'm making a joke. Forget about it. But these are the cryptocurrencies that are partnered with. Now, a lot of these tend to be little tricks because, like, yeah, Chainlink is partnered with you because Chainlink provides you the data. Like, Chainlink provides everybody data, so it isn't some magical thing that you're partnered with Chainlink. But just looking at these, I'm not very impressed. Sure, you partnered with these guys, but these guys will partner with anything. You just have to call them and say, hey, we'd like your connection, and then they'll partner with you. So you have to understand who's partnered with them. You know, when I do the same thing for XRP, I see all the banks in the World Economic Forum, the Bank of International Settlements, the central banks of the world, bankers, companies, IBM, Apple, Microsoft. I see all of them. Okay, now that gives me the tickles. Like, wait, something's going on here. This technology's somehow just gone and partnered with all the biggest players in the world, pretty much the ones who run the entire world. I think they're going to come to fruition. These guys, I don't think they're going to come to fruition. Because, and again, this is just the assessment from this. Just looking at the partners, looking at the stuff, you're like, up until now, they haven't done anything to impress me as far as what's going on. But they're in the new protocol, so let's see. But so now the use case, fantastic. Yeah.
I have a question about XRP because, like, if XRP is very valuable, why is it not really on the radar, and why is it really?
Such a good question. We'll see what else this question.
Yeah.
You see, what they show you is a facade. Remember that in life. Everything about life, everything you hear from governments, this is, again, my opinion, but if you know about it, it's a facade. If you heard about Evergrande, then that Evergrande isn't what's going on. Remember that about life. Everything you know is a lie. Other than that, everything's fine. Okay? So what we're being told by the markets and in general is that XRP is, look at the price, it's done nothing. Don't buy it, right? As a matter of fact, American citizens, you can't even buy it. It's illegal for you to buy it. Why would you buy something that's illegal? And it has a lawsuit. And it has a law. Yeah, Americans can't buy it. And there's a lawsuit against it. It's one of the few that has a legit lawsuit from a Securities and Exchange Commission. So you should definitely not buy it, right? And in life, especially in investing life, when they're working so hard to get me to not buy something, you know what that makes me do? It really makes me want to buy it. And then I go do the research on it, like, why are you working so hard to like make me not buy this? And the more research you do, you go, we before. When gold was invented thousands of years ago, the wealthy had the gold first. That's how the world is supposed to work. When stocks were invented, the wealthy had the stocks first. When derivatives were invented, the wealthy had the derivatives first. When money is always invented and printed, the wealthy get it first. Crypto was invented, we got it first. So they're really concerned about that because they want to move into it, but they can't. They need regulatory clarity to go in there. And we're YOLOing in with all of our life savings, and we don't care. We don't care about regulatory clarity because we are the world. So they are like, okay, how do we invent something that potentially is going to carry the value of the entire world on it without getting these plebs in first? Because if they get in, they're going to jack up the prices. So here's how we do it. First thing we do is we release a crypto. First of all, the idea of cryptocurrency was written about in an article in 1988 and released in The Economist called the Phoenix article. Read it for yourself. It described exactly cryptocurrency, said what it's going to do, and it said in 30 years it'll be released. And like clockwork, exactly 30 years later, Bitcoin was released. Yeah, these things don't just happen out of thin air.
Can you post it like the article?
Yeah, I'll post it. Yeah, but again, conspiracy theory? I don't know, but they nailed that one on the head, didn't they?
It's also bad.
It was also patented. I didn't even know about that, but like apparently, there you go. But the idea is, they knew they were going to release this. So here's how I keep you from buying the one we're going to use compared to the one we're not going to use. First of all, I just hook up the computers, which are called blockchain, and just put a couple codes on them. I put, 21 million will ever exist. Issuance will be at a diminished rate over time. And I flick on the computers, and I release it to you guys. That's what Bitcoin is. Okay? They released it to us, and we went, Bitcoin. Bitcoin's everything. Bitcoin's going to run the world. Bitcoin, Bitcoin, Bitcoin. I want Bitcoin. Everything's Bitcoin. God is Bitcoin. Life is Bitcoin. Love is Bitcoin. Right? We just became Bitcoin heads. So we're just watching Bitcoin. Right? And once we were all watching Bitcoin, then they allowed Ethereum to be released and become regulatorily compliant. They actually opened the regulation. So while we were all focused on Bitcoin, Ethereum was actually the first one that was really the big one that was released. And Ethereum is the one that all the finances are going to be built on. And even today, people don't understand that, and we're not even in Ethereum. I mean, we are like, we think Bitcoin, I want to accumulate Bitcoin. It's fine. And then they released actual currency that matches all of those properties that were described in that 1988 article and has every single piece of the puzzle built into it for it to be the single most efficient means of value transfer across the world. They effectively invented the rails that value would move on across the world, down to like literally allowing the ability for central banks to have the main control and then give banks the control and then each account to be hooked up underneath like everything perfectly, released it as XRP, and then kept it away from people last bull cycle, I remember it was like, all the other coins are shooting off to the moon, and XRP is like, nothing. People are like, this thing sucks. It's not making me any money. I'm going to sell it, and I'm going to leave. Guess what that did? Drop the price down even lower. The rest of the people are like, it's doing nothing. This sucks. I'm watching 200%, 300%, 500%. This thing just did 1,000%. XRP sucks. I'm leaving. So everybody left. And then one day we woke up, and it had done 360x, did 36,000%, and everybody wasn't on that boat. And it became the best performing asset in the last bull run. And then they crashed it back down again, and everybody left XRP again, and for years it's done nothing. And most people who don't actually know how to look at these things go, it's done nothing. Why would I want it? Okay, do you want a great asset when it's done nothing, so when it does something, you're on the boat? Or do you want like a Solana that's already done 200x or 100x after it's done the 100x because you've seen it do 100x? If you do the first one, you're a smart money investor. If you do the second one, I'm sorry, you're on the dumb money boat. right? So the reason why it looks like it's doing terrible is because that's how it's engineered to look. They don't want you to buy it. They want you to buy everything else. Because eventually, from everything that I'm seeing, it will run the entire world's banking system. And that's pretty damn valuable. It's more valuable than the internet, more valuable than gold, more valuable than any of the use cases that these other currencies are coming out with. Now, is it going to take 10, 15 years to come to fruition? Sure. I think about things on a 10-year scale. If you're thinking about things on this 5-year, like less than 5-year scale, again, you're not in the smart money boat. And if you're looking at things into 2-3 months scale, you're about to get chewed up, right? So now we're doing the analysis on it. It has some good investing partners, some of them, not all of them. It has partners, like 6 of them. That's not very promising. Can we do coin market cap and then search up this one? I'll do it.
No, you can do it.
Yeah, coin meter MTR. Now, if you buy XRP because I said that and you lose all of your money, that's a you problem. Okay? If you put your money in there without understanding it, I'm sorry, guys. A lot of people lose their money like this. So don't just say it because you heard me say it, or do it because you heard me say it. Do some research. If you reach out, I can give you resources which you can follow yourself. We literally go down to reading the law and reading the actual releases from the bank, from the World Economic Forum and other places.
Meter stable?
Meter stable, yeah. Exactly. And I've been following the lawsuit and I've been reading the releases from the court all along the way.
It's finished, isn't it? Skip that part.
It's already,
pulling out crap.
yeah, it's already finished.
Just stalling.
Yeah.
So they don't want that solved.
I don't know. You do the research and you tell me, Alex. It is, yeah, it is. It's already, the lawsuit looked like it was against Ripple, but the actual lawsuit was, it effectively came out to be that Ripple was suing the SEC about how corrupted their systems are. Now so much has come out that if they don't settle, this will become the precedent used by all of cryptocurrencies to not be under the purview of the SEC. So they'll settle.
They could create the XRP law and file the Howey law.
Exactly. Yeah. So they literally can use it as the reason that they wouldn't have to apply it to other cryptocurrencies, which I'm hoping that would happen, but the SEC wouldn't let that happen.
Sim, assuming question, off topic.
Yeah.
Do you think XRP is going to follow the trend that it followed in the last bull run, in this bull run?
You can.
Do I think? Yeah. Do I think it's going to be the? The question is, do I think it's going to follow the same trend as it did last time? No, because there are other currencies that are going to crush it as far as returns. It's not going to be the best returning asset simply because it's not in that part of its curve. It well past its initial growth curve. Now it's in the starting of the adoption curve. Do I think it's going to do that, where it just goes nothing, 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 something? Yes, 100%. In this bull run. In this bull run. Yeah, it's going to do that, and then it's going to crash back down. And then over the next 40 years, and again, anything could happen, this is just my opinion, but in the next but I do think there's going to be like walls of growth and then corrections and then straight parabolic growth curves. Now, that could happen at the same time that the rest of the cryptocurrencies are going parabolic, right? So like, I'm not saying that there's going to be other ones, it's the best investment. By far, it's not the best investment. There's going to be other investments that are going to be great. But as a fundamental investor, for me to spend, over a year of my life researching something and getting into it, it's the one that I feel comfortable with because the fundamentals are the best that I've ever seen. And I know that that research will be valuable to me over the next 5 years.
So you're looking at it as a total investment?
I don't hold anything. Right? So this is where that's a really good question, because people think like, I'm what you call a carry investor or carry trader, I guess, where I'm not, just because I believe in a project doesn't mean I sit in the project forever. I'm a carry trader where I get in before everybody's looking at it, and I get out everybody loves it. And then I wait until everybody's not looking at it again, and I go buy it at 10% of the value, right? So my goal, my investment strategy is always be in this bull run process, get in last year, get out before the peak, or at least get most of it out before the peak. When the peak and all the signals come in, completely get out of the market. It's probably going to take 6 months to a year for that process to happen, the bear market to complete properly and all the money to bleed off. In that time, take the value I've generated and set up revenue streams. Within the year, those revenue streams will give me 100% ROI, so my money comes back, and then take that money and go back and put it into crypto while everything's at the bottom. Now I've turned my crypto into revenue streams and the revenue streams back into crypto without losing any of the crypto, and then I have revenue streams forever, right? So that's my kind of wealth generation strategy. But it does include me not holding anything for a long time. It's literally buy it low, sell it high, let everybody else lose their money, then buy it, then hold it, and then even at that point, leverage it and use it as a revenue stream by using debt against it. Hope that makes sense. Yes, yeah, and rinse and repeat. And then hopefully by the time we're, in the 2025, maybe 2029 range, then I'll really start to hodl the ones that have proven track records. Maybe, I don't know. But I think even by that time, I'll be kind of 50% hodl and 50% in and out of the markets strategy, I guess. So.
Revenue streams, are they like separate from crypto completely, or like crypto related? Not
Everything.
It's always crypto related.
No, everything. Like everything. Like the revenue streams that I'm looking at and setting up right now are government tenders, getting involved in Indonesian government tenders and making profit from that tax-free. Setting up Amazon stores, which give me profit tax-free. And investing in play-to-earn games, which is one of the first digital economies that have been set up, gives me profits tax-free. And then have, the consulting, crypto consulting, asset management, tax strategies and structures, management consulting to companies, cannabis company, patents that I'm getting royalty off of. So that's like, I don't know, 10, 12 revenue streams already. And this is, you got to think about like this, revenue streams. Stuff that makes you money without you having to do anything else. But you got to do the hard work up front, right? And then those things are reliable. They don't care about crypto, right? A few of them might be involved in crypto. Yeah. Yeah, and like what everybody does is they make their money and then they put it into crypto and they get their 4% over a year. It's like, who cares about the 4%? If you're not making 100% in crypto, or just in general, without taking undue risk, you could do that with the revenue streams in a year. And those revenue streams are infinite money generation streams compared to giving it to a protocol and earning 4%. And this is where the traditional world of investing and the way of thinking about stuff just completely falls apart, because that's not how the wealthy generate their money these days, right? So this coin sucks. Like, it doesn't even have a circulating supply. It doesn't even have a market cap. I'm just kidding. Like they're a new coin, so they don't. I'd have to look into it in more detail. That's why this is the problem with just doing it with like new coins. I haven't done my fundamentals on it. Yeah, I probably died. Well, it's back on. Yes, it should still have some. Sorry, so just before we go deeper into just doing the XRP analysis, let me make sure we've gotten everything. So we talked about, let's just quickly touch on the teams and partnership part, because that's really important. Your project's great, has a great idea, has a good supply, has a good issuance, has a good everything. But if it doesn't have a good team, it's not coming to fruition, okay? Like, you probably know about this in Bali. There's 1,000 fantastic ideas about building a new community and we're going to change the world and we're going to do this. They're not coming to fruition because they don't have the right leaders. And I've seen a bunch of them fall apart. This is the reason why most startups fail, is because they don't have the right leadership. They simply won't come to fruition. So you must know who's leading these projects that you're standing behind. Okay, XRP. These guys are some of the premier financial experts of the world. They're in the World Economic Forum. They're some of the most well-noted financial experts in the world. And then, it's a massive company that's being led by teams upon teams that are dedicated to each region, and they're partnering with lots of partners. So we'll talk about partners next. The team itself determines the execution. They have literally the guy that everybody thinks potentially could be Satoshi Nakamoto as a joke, but this guy's so smart. Schwartz, forgot his first name, but like, yeah, David Schwartz. Yeah, there you go, David Schwartz. He's literally one of the smartest human beings I've ever listened to. Exactly. Oh, that patent. Yeah. They've had it the whole time. Now they have on-demand liquidity patent, which is on-demand liquidity is everything. David Schwartz. So knowing Schwartz, Schwartz. Yeah, Schwartz. Yeah, not Schwartz. Schwartz. Right? But knowing the team that's leading the project is one of the most important things. If the right team isn't leading the project, they're not going to make it. They're just 100% not going to make it. Which tells me 90-something% of these projects will not make it because they're young guys who have all these ideas. And when you look at their track record, remember, 90% of companies fail. Out of the 100% out of the 10% that survive, 90% are created by people who've created successful companies before. So a metric for your project succeeding is that the team should be somebody who's built a successful company before. And if they're not, just that they're not going to make it. Statistically speaking, there's no way they're going to make it. Just leave it. It's okay. Don't worry. We don't need to pull them up on the screen. It's okay. But the team, the leadership, the team is like critically important. Critically important. I can't stress that enough. But along with the team is the partnerships. Because like, great, I invent XRP. Sim makes SRP. Okay? It does everything that XRP does. Everything. I built it on the same code. As a matter of fact, I could take XRP and just copy it. The code is there. I could just take it. I mean, it's not fully open, but like, I could take Bitcoin and copy it, right? But let's just stay with XRP. I could take XRP and I could copy it. I could invent a new banking system in the world. Do you think they're going to let me just switch over the entire banking system of the world? Not very likely. I don't have that kind of pull, right? Whereas looking at the partnerships, you can see, okay, who has the pull? Okay, the Bank of International Settlements. They're the central bank of central banks. Central banks. Banks. Bankers. World Economic Forum, IMF, World Bank. Great. Those are some really big players in banking. They are the banking system. Literally. I said banks, right? So when I look in droves, okay? I love it. Partnerships are almost as important as the team itself, because a team could be fantastic. They could have brought projects to life, but if they don't have the right partners who are going to implement the technology, the thing is not coming to fruition. Now, a couple more. Another one that kind of just gets left in these things is usage. And I don't mean just like live usage where it's actually being implemented. That's a good one. That's a really important one. Like as soon as, VeChain announced that China announced that VeChain is the one cryptocurrency that they're going to accept into their supply chains. China is supply chains. And when they accepted VeChain, that means VeChain gets the biggest check mark they possibly ever could have, even if they aren't coming to fruition. But at the same time, and Walmart, yeah, exactly. Yeah, and now Amazon's going to do it. Everybody's going to do it because supply chains. Right now, they're one of the biggest use cases for cryptocurrency in general because they're completely disrupted with all this crap that's going on.
We've got China versus the rest of the world.
Yes.
You've got to try and take the bets on one XRP to get stuff to VeChain.
Of course. Yeah, and like if they want to track every single thing that we do, every single thing that we touch, every single thing that we consume, the way you do that is VeChain. So yeah, so VeChain gets really good usage. Then you see, okay, VeChain's actually being used. There's actually a farm-to-table company that's using it. There's actually product companies that are using it to track where the plastic comes from that they're using in their products. Those usage numbers are great. But then you run the on-chain analysis of how many people are actually using it. Like how many addresses are created, how many transactions are being put through, how much growth is there in the number of users. That's on-chain analysis. So that would be kind of the final piece to looking at the value of something, how many people are using it. So that's why when people are like, Cardano's an Ethereum killer, Solana's an Ethereum killer. First of all, like they're not humans, they don't have to kill each other. Okay, they can survive in harmony alongside each other. Secondly, when you look at the usage, you look at how much money is there, how much actual value is being generated, how many users are there, what the growth rate of the users are, all that stuff. Ethereum is still leaps and bounds ahead of everybody, contrary to popular kind of assumption and belief, right? And you can run on-chain analysis and go in there and research this stuff. Now, everything I've just said put half of you guys to sleep. Right? Because you're like, I got to do all this just to buy a damn coin. Like, why do I have to do this? Like, this is bullshit. I wish there was somebody who would do it. There are. There's this website. It's called youtube.com or whichever country you're in. Is different versions. Confused. So that's the thing. Most people, they hate YouTube because you go on there and you ask a question and one person says one thing and one person says another thing. So that's where there is a lot of fake news and a lot of wannabe people and like the BitBoy cryptos who will tell you a bunch of stuff and you'll be like, okay, how do I know that? I guess this is the biggest guy in the world. That's why I'll listen to him. So that's where you have to be judicious with who you're using. But when you're doing the fundamentals, it's really nice because the fundamentals are the fundamentals. Right? Like if you want to find issuance of XRP, you just go into YouTube, type in issuance of XRP, and somebody's done the research for you. And they might have one viewpoint, so listen to like at least 4 viewpoints. I recommend like 5. But once you watch 5 videos, you won't have to do all of the research as much. If it's a popular point, somebody's probably already done most of this stuff. Somebody's probably already gone like what's his name? Coin Bureau. He does great ones. He'll go in and he did one for Luna. Gave me a full download of it. I really understood it. So there's resources for you to be able to do it. But if you don't do that research and you go buying random things, the probability of you losing your money goes up a lot. Okay, so this is where the fundamentals are coming from. So now, XRP, let's look at XRP. So it's only 91 cents. That means it's 4,000 times less valuable than Bitcoin. It's 40,000 times less valuable than Bitcoin, right? Bitcoin is 42,000 times as much. So is Bitcoin 42,000 times more valuable? No, because gold is worth 10 trillion and there's $400 trillion of actual just interstate transfers that are happening, cross-border transfers that are happening. So clearly this thing's more valuable than that, but the number is lower. Now, the more important number out of these prices is probably this one. Like this number almost matters more than this one. How much is it valued against Bitcoin? Because right now Bitcoin you should be trying to accumulate Bitcoin. I mean, I don't have to say this in this room, but like if you're online, you should be trying to accumulate Bitcoin or Ethereum or some asset that's actually valuable, that's actually deflationary, that is much more valuable than the dollars. If you try to accumulate dollars, you're still missing the point. And that is right here where the mouse is right now. Because if something is worth less Bitcoin, that means it costs less Bitcoin to buy that thing. Now, if it becomes, these things move in kind of tandem where the money tends to flow into Bitcoin first, because Bitcoin is the most reliable and institutional grade investment asset. Bitcoin price will go up. The rest of them started to move pretty much in tandem with Bitcoin, but there are still these season aspects where there's Bitcoin season, which Bitcoin goes up in a big way, then it takes a bit of a break, and then as it's taking a break, those profits it's taking a break because there's some selling going on along with the buying, and those profits bleed down to the altcoins. They'll usually go Ethereum and the rest of the altcoins downwards, and they'll go Ethereum, mid-cap coins, which are in the billions of dollars, then low-cap coins, which are in the millions of dollars, and then they'll go down to micro-caps, which are in the single-digit millions of dollars. But when that happens, you'll see You know, if Bitcoin's going up and the asset is, let's say XRP is just sitting in one place, that means the price of XRP will get lower compared to how much Bitcoin is worth. So you'll be able to buy more XRP with that Bitcoin, right? So you can play the market like that as well, where you can realize, okay, it's getting cheaper to buy this, maybe I buy this now. When it goes up against Bitcoin, I can then maybe come back to Bitcoin and I can generate more Bitcoin that way. That's what some of the traders do. But the point was, the dollar denominated value is the least important number on this whole screen. And if you notice, it's the biggest number on this whole screen. So it's the facade that they're showing you. And this isn't by some, like, nobody's trying to trick you, but this is just the number that people care about. The supply right now is 46. The reason why it's 42,000 times cheaper than Bitcoin, one, because it hasn't come to fruition and the investment isn't there in a big way, but also because there's 46 billion XRP that exist already today in circulation on the market. And total 100 billion will exist compared to 21 million, right? The projected hypothetical value that the world thinks it is right now 42 billion. Even if it was fully diluted, it would be 91 billion, right? So it has a great use case. It adds a lot of value to society. It has, the supply is pretty damn high, but it's limited. And when you look at the issuance, it's going to be issued at $1 billion per month, I think it is, after a certain period of time. There's even a chance that part of this, the supply that's not in circulation will be burnt, maybe, who knows. It, in the bigger picture of things, it's not valid. Like, if we're saying, you know, $400 trillion of potential value that it could be at, and it's at $42 billion of hypothetical value that it's at today, it has orders of magnitude of growth potential. It has the right partnerships. It has the right team. It does have a lawsuit against it, which makes it much riskier as an asset, because, you know, if you don't know what's going on, maybe that lawsuit could crash it to zero. That lawsuit is making it so that it's making it look like it's regulatorily incompliant. I guess that's another piece that I forgot. Here is going to be regulatory compliance, because us just being able to make money out of thin air, those days are pretty much going to be done pretty soon, because they want to control the money. So is it regulatorily compliant? This one looks like it's not yet, but the way it's built, the right partnerships that it has, it looks like it is going to be compliant. So that is how you understand the value of cryptocurrencies and coins. Now, any questions?
In context of tokenization, for this very token, I don't fully understand the whole tokenization game, but they're doing something funny with escrow. So their escrow system, as they set it up in the white paper and they're executing it, do you see it helping with tokenization or hurting their tokenization, specifically with escrow?
So what we're discussing is tokenomics. Tokenization is a whole different thing. Tokenization is tokenizing assets themselves. The tokenomics of it, I think what you're talking about is the on-demand liquidity pool, which is the escrow basically. Actually, the escrow part of it is, there's a very specific part of it that is escrow, but the part that is talked about is on-demand liquidity. It is the central thing that really led me to believe that this is going to be the thing that services the entire world's monetary flow. Because I don't even know if this thing's on. Yeah.
It's not. It's muted. I need to.
Okay. So the question was, does that on-demand liquidity pool help the tokenomics of XRP? Yeah, I feel like it is the tokenomics of XRP. All those other things, great. Those are great things that all add value to it. But the single most important thing that we need for the entire world to use cryptocurrency, I mean, I don't want to say the single most, but for me, the most important thing, and also for the entire world to have the next leg of prosperity generation, is right now we have $150 trillion of value, 150-ish trillion dollars of value that's in cash or money that's liquid. We have, I think it's a couple $100 trillion of stocks, a couple $100 trillion of bonds, 200-something trillion dollars of real estate, $250 billion of $1,000 trillion of derivatives, And that's how the value is held in the world. And it's all kept in these silos. Real estate, anybody who's tried to sell real estate will realize how difficult it is to make real estate liquid. You have to go through lawyers and government bodies and notaries and just so much. Anybody who's tried to buy stocks, legitimately, you got to be, most stocks you have to be a accredited investor. So, and then you have to deal with the stock exchange. You have to do all these things. Derivatives, same thing. Most of the value in the world, same thing. What we need is that value to be able to flow seamlessly across the world. The value flows right now is it uses, especially cross-border transfers, it uses liquidity pools. So if you want to send $1 million from the US to Indonesia, you would tell your bank, I want to send $1 million. First of all, they'll go, why do you want to send $1 million? Like, what's wrong? And you'll be like, it's my fucking money. I want to send it. And they're like, that's not how this works. You got to explain to us why I'm moving $1 million. And as a matter of fact, don't talk back to us because we'll shut your shit down. Sorry, I digress. But they will ask you why you want to do it. You explain why you want to do it. And let's say you get through the regulatory loopholes. They'll be like, okay, we'll send you $1 million. So here's what happens. One of the bigger banks, because they're not going to move $1 million to Indonesia and turn it into Indonesian rupiah. That process requires them to have $1 million worth of Indonesian rupiah here, which they probably don't. You have XYZ Bank. So they'll probably go to Chase or HSBC or Citibank. And the way they'll even do it is they'll go to their partner bank. That partner bank is partnered with Chase, HSBC, or Citibank. They will say, hey guys, we want to send $1 million. What Citibank or Chase has a partner bank here where they're keeping $100 million or $1 billion with the bank. And then they will approve it from that side saying, hey, we have the custody for the $1 million. Please lock up $1 million from this side. And then this liquidity pool here will take a week to verify and checks and balances and all this stuff to then send that $1 million to their partner bank here, who will then deposit it into your bank account. Everybody will take a cut. 1,000 humans will be involved. You will have to go through loopholes and stay awake at night to prove that you want to move this $1 million. It'll take about a week, and it'll tie up $1 million of liquidity from a pool where $1 billion is just sitting there. And the worst thing you can do to money is let it sit. So the on-demand liquidity pool, XRP, says we have we have $42 billion liquidity pool sitting there. When I want to send $100 million of my derivatives to a bank in Indonesia and turn it into real estate, here's how blockchain is going to do it. This property, you want to buy this whole property? $5 million, right? This entire property is on the blockchain. It's tokenized. Those tokens are verifiably held by me, and I have them up for sale. And I have a smart contract that says it's available for sale to whoever wants to buy it. To move it, you click sell. The moment you click sell, you sold it using a smart contract that moves that $5 million on the XRP blockchain, which is why it's called the rails that money moves on. And the liquidity pool in the middle is used as the transfer mechanism between US dollars and Indonesian rupiah. So we have $42 billion of available supply. $5 million gets added into the pool that ties up $5 million of liquidity in the pool itself. And then it gets unlocked on this side in my centrally controlled bank account as Indonesian rupiah, as currency, within 3 seconds. And the smart contract on this side of the bank account says the moment your $5 million comes in, sell him this property. So it takes probably another millisecond for the property to be sold to you. So now you instantly converted your derivatives into real estate, and you could do it backwards in 3 seconds. And that is the beauty of this new system. But when that new system goes live, which is going to be projected to be November of 2022, which is when the ISO 20022 system goes live, on the way, every single country that I need to pay tax to, and every single institution that I need to report to, and every single financial task force that needs to know that this transfer was done, will instantly be notified, the tax will instantly be taken, and the check will instantly be done that I'm vaccinated. And if I'm not, that money ain't moving because I don't have an bank account on this side. That should scare the fuck out of you. That's yesterday. No, it's I mean, I'm not saying this is happening. This is the plan. 2030, this is how the world is going to run. The execution, the implementation of that system is supposed to go live according to their own documents. It was supposed to go live in November of 2021. They moved it to November of 2022, the beginning of the implementation. And then the completion of the implementation globally is 2025. And when that system goes live, all of your cryptocurrencies will need, if you want to use it in the legitimate world, will need to go through gateways, which are interoperability layers. So let's say this is that world that we just talked about: stocks, bonds, derivatives, bank accounts, real estate, everything, money, buying food for your gate. Connected to, so it has a backbone built on these assets with the on-demand liquidity pools. It has front ends where the assets are convertible into smart contracts. But on the other side, the people are only allowed to touch central bank digital currencies, which are currencies and they infinitely inflate. That's the system here. Your cryptocurrencies are here. Those cryptocurrencies, when you want to turn it into money and spend it, will need to go through interoperability layers, probably built on things like Corda. Know of, there's probably going to be hundreds of these. And those interoperability layers will convert your currencies seamlessly in the same process. The way you did it with derivatives, the moment you need to buy milk, you know, you will walk into a store, pick up the milk, and as you're walking out, the store will know that you walked out with the milk. And at that point, you've said, my Ethereum is how I buy milk, and your Ethereum will automatically be converted using interoperability layer into a central bank digital currency and pay for that milk. Right? And that's the world that we're. The beauty of that system is now money moves fluidly across the world. Everything interacts with everything. The terrifying thing of that system is everything interacts with everything. You better meet those requirements to participate in it. And I know this room is full of rebels, and we don't like to comply with shit. And we like to be like, no, fuck you, I'm going to do it my way. And they're going to go, oh, you want to do it your way? Go and build your own way. You want food? Where's your food? Are you growing it? Oh, you want to get it from the supermarket? Have you guys tried going to Pepito? Have you seen that app? Try going to Pepito. They have a contact tracing app that they're making people download. And if you pardon? It's going to be everywhere. That's
You do it here in the malls. You can't walk in the mall without scanning.
Yeah.
And in Java, to go in Indomart, you also need that.
So it's happening all around us. For now.
For now, but it's gonna be.
Are they gonna be a month like that and they're like,
It's like boiling.
No, here's what's going to happen. One day, I don't know, I wish nothing. One day, we'll wake up and there'll be a black swan event that nobody will see coming. I don't know what it's going to be, but it's going to be so much worse than COVID that we'll wish we could go back to 2020. It's going to be the reason why everybody's going to submit the same way COVID was the reason why everybody gave away their rights. It will be the reason why everybody submits and jumps into this new system, and they literally won't be able to operate with Bali. They won't be able to interact with Bali unless they're in that system. And that's when Bali will be like, of course, we need people's money, we have to accept it. And that's why don't sit complacent and hope that this doesn't happen, or like we're in Bali in like our energetic bubble, and to keep things outside of my manifestation bubble, because there's other guys' manifestation bubbles and they're global bubbles, and when they want something manifested in your bubble, they tear that thing open and they put it inside your bubble, no matter how much you try to keep it outside.
What's the alternative? I mean, even crypto there,
Yeah, yeah.
I was like, cool, crypto's out, like
crypto is the system.
But you're saying that the agents, can I get into the matrix?
Sure, the agents.
So agents,
Yeah. No, I'll do this. Yeah, there you go.
so the agents are basically also rolling out the blockchain. They are the source of the blockchain.
They are the blockchain.
Okay, so then what about us when we do this? We don't want to be in the matrix. We want to be in the ship with Neo and Morpheus and everything, right? So
Yeah.
we can go into the matrix just to like get milk.
Did Neo go into the Matrix to get milk?
No.
Neo went into the Matrix to go save the people from the Matrix.
Absolutely.
Right?
But
and
he
do you
lives-
remember outside the Matrix? They ate oatmeal.
Oh, yes.
It was slop, right?
Yes.
You ready to eat slop?
Well, I'm asking you, what is your take on this? What's your life going to be? Here we go.
Great.
When this shit happens.
Great question. I'm building my own farm. I'm pulling out my own water. I'm building digital economies that do not depend on them and that allow me to operate completely outside. I'm pulling energy from the air. I'm setting up a wind turbine. I'm going off grid. Within 10 years, I'm leaving the internet. Other people will access the internet for me. You don't want to let me into Pepito? Don't worry. You'll never see me around Pepito.
So self-sustained. Right.
Here's step number one, wealth. Especially in Indonesia, step number one, wealth. Step number two, do whatever you want with that. You got it. You got to figure it out. But figure out a way. If you're really a rebel, you really want to rebel, here's how you rebel. This is coming from like Bolshevik experts who rebelled during the communist revolutions. You don't rebel by going out into the streets. You don't rebel by posting memes on Instagram and feeling good about yourself. You rebel by building a new way that's better. That's so much better that the people who want to rebel come live in that way. And that way literally is going to have me with my hands in the dirt, making sure the dirt's good, growing the food, feeding it to my kids, and then teaching all my kind of rebellion is, I shouldn't be doing this on recording.
You can cut it.
Pause
Oh,
it.
it's great.
Pause it. Pause it. Pause it right now. Sorry, guys. Yeah, so that was it, right? So yeah, going back to all this stuff, what we're doing is we're taking our prosperity out of the old system. We're putting it into high quality digital assets, which you've vetted. Make sure you're not going to lose all your money. No, last time we recorded this stuff, I couldn't even post it on YouTube. Okay, so like, we're not. I don't want.
Tokenomics.
Yeah, token. So yeah, just do your research on things. If you don't know, please learn, and then next time we'll talk about one of the topics. Any other questions? Anybody?
I have a question.
Yeah.
You mentioned that there were two terms. Tokenomics and token something else?
Tokenization.
Okay, can you just in closing explain those two?
Yeah, so tokenomics is the economics of a token. The economics of a token are what we just looked at. How does a token work? How many are there? What are the partnerships? What is the economics around the token? What are the growth potentials of the token? Basically, analyzing the token itself. Tokenization is the process of taking the entire world and the real world and putting it onto the blockchain and turning it into little tokens and selling it to people. Tokenization is what we're doing to this property, where we're taking this property and turning it into instead of having one millionaire who has $5 million owning the whole property. Tokenization is what's going to allow the nickel mines, this is what we're lobbying the government for, nickel and cadmium and palladium mines, and break them up into tokens, put them on the blockchain so they're completely verifiable as far as who owns them, and allow the fluid transfer of a nickel mine in a moment's notice to anybody who will participate, and allow somebody in a village to be able to buy it. That's tokenization, and that's another reason why every single thing in the world is going to be on the blockchain, and I literally mean every single thing. It's just how the system's going to run, because we don't want people involved. We want properties to be tokenized. We want every single thing in the world to be tokenized and for it to be transferable between people. And that's the way that it's gonna, that, you know, you won't own anything, but somebody will, and they will control it through the tokenization process. And actually, in closing, think about this. If we don't have jobs, we don't have businesses, there's no people involved in the process, then how does stuff get made? Because we're gonna need stuff. It's gonna be made by robots. And those robots will be tokenized, and the prosperity they generate will be used as the value generation mechanism to give that value to whoever owns the tokens of that. So the next stage of crypto is going to be tokenizing the entire planet and you being able to participate in owning the planet through tokenization. And we'll really talk about that. That's kind of what we talked about in the last meeting where they were talking about it. But I think, you know, they kind of focused on one piece of it. We'll talk about the bigger concept of tokenization. We're actually figuring out how to tokenize the entire world. As soon as it's live, we'll have some more details. See you guys next time.